What's going on? We got a good show today. It's going to be a very fun one. But the real question, after all of this pump, a lot of you guys are asking this question right now. Was Tim just flat out wrong? Did Tim miss it on this one? I want to start off by saying, guys, I get things wrong all the time. I'm very flattered if any of you are shell-shocked by the fact that sometimes I get things wrong. But I do. But the question is, did I get this one wrong? Was the FOMC meeting yesterday? I'll say this. Let's start off. I was wrong about the FOMC meeting. I predicted that we would get 25 basis points. Absolutely. Got me. I'm guilty. We got that one wrong. Now the question is, am I wrong about which direction the market's going to go after this 50 basis point cut? We're going to talk about that and a whole lot more in today's video. You do not want to go anywhere. Whether you liked my predictions or hate them, you want to stick around and find out more details about what is going on in the markets right now. But first, smash that like, hit subscribe, and we've got to roll the intro. Shroom, my friend. How are you doing, my friend?
Better than I deserve, Tim. I'm hodling on.
Good.
Hodling.
Love the Troy Ben says Tim is less right. There we go. Tim is less right. Listen, here's the thing, guys. I got some things wrong. I got some things right. We're going to break into all of that here in a little bit. I'm not going to say that I got things right yet. A lot of people out there looking at this pump are thinking Tim predicted a crash. If you go back and watch yesterday's video, that's not quite exactly what I said. I'll explain it here in just a couple of minutes. Right now, though, Bitcoin is doing, I'll say it's a little faster than what I thought it was going to do. It's doing what I thought it would happen, but I will have to change some things. People are going to say, Tim, move the goalpost. Man, this is going to be a fun show, Tim. T-shirt. They're going to get a lot of hate in here. This is going to be the smear Tim show. It's okay. I embrace it. Say what you want. I want to make money. I want you guys to make money. You got to adapt and make sure you understand all the information coming at you from every angle to make sure you do that. And but I'll tell you what, guys, as long as there's not like crazy disrespect, I tolerate all of you guys critiquing me, correcting me. You guys fill the chat. Tim was wrong. That's fine. You guys can say that. That's completely fine. Because guess what? I was wrong about a lot of things. That doesn't mean we move forward and we don't take all that information in and do things. Let's talk really quickly here, T-Shirt, about a couple of big things I was wrong about. The first thing I was wrong about, I just said in the intro, 25 basis points. I have a very good reason as to why I predicted 25 basis points. I stick to my guns that 25 basis points would have been the right decision for the Fed. I'll comment on that a little bit later, but I was wrong. We got to 50. That means everything I've been talking about up to this point, if you guys have been watching our content, I was super bullish leading into this FOMC meeting, right? I was predicting we were going to be hitting new highs. I predicted that September would finish being bullish. I predicted all these things before that freaking FOMC meeting, and I got it wrong. Well, I know we're pumping today. In fact, we're pumping to levels, if you watched yesterday's show, we talked about, some of you remember, we said $64,000. But what did we say about 64,000? We said we need to see a daily candle close above 64,000. We also said roughly 24 to 48 hours. I know we're in the first 24 hours of that, but 24 to 48 hours is the volatility of after FOMC meetings. Usually it doesn't have to go all the way to 48, although it has in the past. But we predicted you can see misdirection for up to 24 to 48 hours. We're still within that window at this point. So I'm not necessarily wrong there yet. I will say, after kind of sleeping on the information, am I convinced we're owing all the way down to 46,000? I don't think so. I'm not saying we can't. I think that's a definite possibility, but there's a number that I'm going to watch and I'm going to show you guys today that I do feel pretty good about price coming back down to if we do, in fact, see Bitcoin start to move to the downside. And right now, while Bitcoin has flirted with that number we predicted yesterday, we did get that detail right, that the key level to watch would be 64,000. And I told you guys, if we get a daily close above 64,000, I would switch back to being a bull. I would love to see it happen. I want to also let people know, before we get into the TA and all the charts and everything else, another very important piece of information we talked about yesterday. I hope none of you sold your Bitcoin, because that is not what I said to do yesterday. That is not what T-Shroom said to do either. We talked about finding a position close to $64,000 to look for a short trade, not a take profit on your macro Bitcoin position, not give up on the bull market and run for the hills. Look for a way to trade it down, because you're going to get a discounted purchase probably within the next couple of weeks. That is still absolutely on the table. I did not sell a single dime. So anyone in chat saying, man, my portfolio's up today because I didn't listen to Tim. Guess what? My portfolio's up today too. But it's because I didn't say to sell anything. I said this is going to be an opportunity to get a dip to add to your current portfolio. It is a massive mistake at this point in the bull market. And they heard that right. It is still a bull market right now, even if we're about to dip in price. It is a mistake to sell your long-term positions. Hold them. Do not sell them to BlackRock. Do not sell them to MicroStrategy. Do not sell them to anyone. Hold those positions tight. But look for dry powder to add at opportune moments. I still believe those moments are happening. A lot going on there. T-Shroom, anything you want to say before we jump in? We're going to take a look at bubbles. We're going to look at a lot of charts. We're going to talk about a lot of details. I put out a video this morning that I think is going to be very helpful for a lot of people to watch. If you have not seen it yet, go watch it after this live stream. But T-Shroom, any thoughts you kind of want to chime in here? Things that you're surprised by, things that you thought exactly was going to happen and you've seen it play out. What are your thoughts there?
Mm-hmm. Well, what I definitely agree with is that, we were wrong about the 25 basis points, not being what the FOMC went with. But we were among 105 other economists that were also wrong, right? The vast majority of economists thought that we were getting a 25 basis point cut. That is not what we got, and very few of them were actually correct about that. And really the best explanation that Jerome gave us as to why they're giving a 50 basis point hike was so we can have a strong start to this quantitative easing, right? Maybe, but the labor market is completely fine. So a strong start, but the labor market's great. Growth is great. GDP is great, even though most of the spending is from the government. So overall, Tim, I think yesterday was a surprise in that we got 50, not 25. I think now here's what's interesting. I was actually talking to my wife about was, we got it wrong. However, we'll never know if the outcome on the charts, how the market would have interpreted 25 basis points. We don't know if it would have interpreted it pretty much exactly the same. Mm-hmm. So that is an interesting factor to consider. We got to cut. The main thing is that we got to cut. Now, I think now that we've tested to the upside, right? We had tested the upside. I think now the question is, do we come back down and look for support, and does that support hold, right?
Yeah.
So we'll see. But I don't think we're done testing the upside quite yet. We're going to look at the charts and find that out. But the next most logical thing is a test of the downside next, once the buyers get exhausted.
We're going to keep talking about this for a while. This is going to be the main topic of the show. I don't think there's a whole heck of a lot of news today, but so still unpacking what happened yesterday and what the markets look like going forward. Still going to be a great show. We're going to have a lot to talk about. But what about all the reporters? I mean, every single question from the reporters yesterday came across as if they were shocked of the details. I don't think that's something to overstep. I know that Polymarkets predicted it. I know that CME Futures predicted it. So people are going to say no one's surprised by this. But the truth is there's a lot of people surprised by that heavy step. And we'll go more into detail on that here in just a little bit. But first, let's start off by looking at the bubbles. As you would expect, it is a sea of green. We're the highest we've seen. Oh, I never shared my screen. Rookie mistake. See, I was so busy being wrong about everything else that I was also wrong about not sharing my screen. All right, Here we go. Green bubbles on chat. I mean, this is to be expected. We're at higher levels we've seen in a week or more for most of these projects. Some big gainers too. Hex. Man, when was the last time we talked about Hex on this show? 20% to the upside. Popcat, 28%. Another meme coin right there. That's very interesting that people are flooding into meme coins right now. Say 19.9%. Core, we were in a trade on that one earlier, still going very, very well. 15.7%. I mean, a lot. Like when you look at these bubbles, it's really strange. Even small bubbles are approaching 10% on their rally. So it was a massive, massive buy over the last 24 hours since the news has happened. But the question is that the sign of something to come? Or is this simply what we are doing to fake out the markets? I want to draw your attention, guys, to something happening right now on Bitcoin. I do have to fix it, go to Bitcoin's liquidation chart, but we're going to take a look over here at how Bitcoin is looking. One of the reasons why we're targeting 64,000, you can go back to my screen now, T-Shroom. Bright liquidation spot here on the 12-hour chart, all the way up here at $64,000. Is there some liquidity up here at 65? Yes, it is brand new. That's all liquidity that has come in today. But one of the reasons we targeted that $64,000 spot was because of all of the short liquidations that were at that level. It is not abnormal whatsoever for trades to get rid of all the liquidations before reversing. Because when you take a look at, they say, the 3 daily chart, we're kind of zooming out. Now take a look at what this chart looks like. Is there a little bit of liquidity right here at 64? Absolutely. That's why I'm still saying I think that we could make a move to 64,000. The question is, can we close and sustain above 64,000, or are we taking a look down here at these liquidations? And this is where I'm going to tell you guys, I'm kind of watching right now. I know yesterday we talked about 46,000. 46,000 is in the cards. But what I'm mostly interested in is looking at this level here around $57,000, where all of this liquidations, these long liquidations, come to an end. A lot of people entered longs yesterday. Guess who's mostly entering longs because of the news? It's going to be retail investors. Retail investors don't always get these things correct. So I'm looking at this. Experienced traders, whales, institutions, they are looking at charts like this and saying, ooh, look at that delicious move to the downside, back down towards $67,000. That's what we're watching at the moment. For the time being on the daily chart, we are above that daily smart trail. That is a positive sign. I do like seeing it. Can we close the daily candle up here? Can we turn it back to being bullish for the first time since way back here in August? That is something that the bulls absolutely need to do. But as we've said on several times on this show, the purple line right here, that is the level to keep an eye on, $65,000. $65,000 is the level that Bitcoin needs to get above to completely control the daily chart moving forward. And the reason for that, as we've said several times, we have seen several lower highs here on Bitcoin ever since that March dip. We keep saying these lower highs and lower lows. Well, if Bitcoin price can get above 65,000, that would be the breaking of the trend. And that would have a massive impact on Bitcoin to move to the upside. It would communicate and show the bulls really are back. But the problem is, as long as we stay below those levels, as long as we haven't closed a daily chart above this smart trail, in theory, this is almost just like the bears gave up for long enough to make the bulls convinced that they're going to break through, only to then go back and win it all along. It's kind of like in tug of war. I remember if you guys seen show, I think that show in Korea. Oh man, it's a bad story. It's a story that's good, but I'm blanking on the name of the show. But it's like a tug of war game where you actually purposefully allow the other side to win for a short amount of time. You let them pull so hard they actually fall over, and then you pull them and drag them on the ground. This could be said, the Bears had room to spare all the way up here towards $65,000. Squid Game. Thank you, Trey. Squid Game. Anyway, derails my point. They had a lot of room to go all the way to $64,000 to $65,000 and still be in control. If they lose that 65, now all of a sudden it wasn't a good strategy. They actually are being shown to not be as strong as the bull. So as much as I want to tell you, hey guys, this positive pump is really good, everything in my being, everything about me wants to tell you guys, Bitcoin's in a good spot right now. Let's long. Top coming in, new all-time highs coming in the next week or two. I wish I could stand here or sit here, I'm in a chair, and tell you that's what's about to happen. But unfortunately, I would be lying to you, at least what my core belief is.
Tim, wait, hold on a second. I got to point this out. Joseph Gunter, which I don't think this name's been here a lot. He said, you've been bearish for a few months. Take a look at the Bitcoin chart. The last few months have been lower lows and lower highs, my friend. So.
I feel like I'm not saying 100% perfect, but we've been pretty good about when to be bullish and when to be bearish. Every time we've dropped to these lower levels, we have gone bullish. And every time we get up higher, we kind of say, hey, there's a chance at a higher level. But if we reject at this level, it's coming back down.
Yeah.
I'm just saying. Anyway,
really, Yeah, really
Even
quick.
more,
Maybe
even more.
for people who are just coming in,
Yeah.
you maybe you don't really know a whole lot about investing and trading and things like that. So Tim and we're big bulls on Bitcoin. I HODL stands for like hold the coin, right? We're very, very bullish on Bitcoin. There's a chance I'll never sell the Bitcoin that I have until the day I die, right? And it'll be
Yeah.
inherited by my children. So we're
Absolutely.
very bullish on Bitcoin in one sense, but we also do what's called trading, which is a shorter time span way of investing in a way. And so in that sense, in the shorter term, we may not be as bullish. We may actually be bearish, thinking price will go down. So just know, especially if you're just tuning in, you've never really heard about Bitcoin too much. You can be bullish in the long term and bearish in the short term, and that's completely okay.
Yeah. Good. Very good point. Very, very good point. Let's go in here. There's less charts to do now. I want to kind of refocus and tell you guys another place where I was wrong. Go back to our split screen for a second. I'm going to share my screen in a second. I was wrong about 25 basis points. All right, I'll give you that. The other thing I was wrong about, I completely blanked on the fact. I told you guys we would know a lot about where the market would be today, right? I want to make sure you guys understand I was wrong. Why? Because I forgot that tonight at midnight is another very, very important detail that we need to be aware of. Go to my screen now here, T-Shroom. Tonight at midnight, the Bank of Japan will give their interest rate decision. Why is this important? Well, first of all, their previous level, they were at zero. They're up, or they were higher than this. Actually, they cut back down to 0.25. The consensus is they're going to stay paused at 0.25% interest rates. The forecasts are going to stay paused, but there's a growing concern that Japan, whose inflation is getting out of control, and we've seen that over the last couple of months, that they've really made the market struggle. There's a lot of concern they're going to have to raise interest rates at their meeting. Now, again, that's happening in Japan. I don't know what time because I'm not aware of the time schedule, but it comes out at 12 a.m. Eastern Standard Time, exactly at midnight. T-Shroom, why is Japan's we talk about America's economy like a lot. Why is Japan's economy so important to liquidity, and what should people be looking for with this decision? What would cause the Bitcoin market and the crypto markets to be bullish about this decision, and what would cause the markets to go to the downside?
So, yeah, this is a topic that's a little more advanced, right? So if you're a beginner, you're coming into crypto, buy Bitcoin, hold Bitcoin, ignore crypto until you understand it, and when it comes to central banks and liquidity dynamics, try to learn, try to understand it, but don't expect yourself to understand what I'm about to say. Okay, so the Bank of Japan was the last to come out of the negative interest rate category, right? So you can actually look right now at all of the different interest bank rates. Okay, so you got this one up here, the U.S. government. That's the biggest one. It's at 5%, right? Bank of England 5%, Canada similar 4.2, Australia 4.3, EU 3.6, Swiss National 1.2, Bank of Japan. With the hike, they came off with the last hike. They came off of zero, ending free money. Zero what? What is zero? What is 0.25? These are the rates at which I can go and borrow money from the central bank. T-Shroom, you can go borrow money at 0%. Yeah, in fact, in 2019, you could borrow money at negative rates. That doesn't make sense. This is an advanced concept. You're going to have to go study it for yourself more. The reason why people are bearish about the events that could happen tonight is that if the Bank of Japan hikes rates, okay, that's going to increase the rate in Japan as the United States rate is coming down. What is that? That's less margin for what's called the carry trade, where you borrow money in yen and then you go invest money into U.S. bonds that are yielding X%, right? Higher than what is going on in the Japan central bank. So as that gap closes, that closes a liquidity window that hedge funds and big banks have been able to take advantage of and exploit for easy money. They're borrowing free money from Japan, right? They're converting it into dollars, and they're going and buying treasuries, which are a guaranteed 5.3, 5.5 in a good case scenario. So that's going to be over if they hike again. Not completely over, because it won't go to zero. That margin won't go to zero, but it'll narrow, right?
Restrict.
So restrict, contract, another good economic term. So that's just generally bearish. Who knows? I have much less of a grasp on the Central Bank of Japan's guidance than I do the FOMC, and we got that one wrong. So I'm not even going to comment on what I think the Bank of Japan is going to do. Who knows?
Yeah.
But
we heard reports like a month ago that they were going to wait until 2025 to start raising rates again. But the problem is with their inflation growing, there's a chance that it goes higher. I know right here that actually that information comes out at 7:30 p.m. Eastern Standard Time tonight. T Shroom will be doing a members Q&A at 7 p.m. So our trading members, actually, you'll get to hear that from T Shroom during the Q&A section tonight at 7:30. That'll have a big impact. Ultimately, what we're looking at here, it's pretty simple. If we can stay paused over there in Japan, I'm not saying that's going to allow Bitcoin just to tear to new heights, but it would be what Bitcoin needs to sustain bullishness. However, if they end up raising rates over there in Japan, for all the reasons T-Shroom just explained, and then the simple mathematics of less liquidity in one of the larger economies in the world, it's going to make things a lot tighter and harder for people over in Japan. That's going to not allow them to be buying Bitcoin. And as T-Shroom explained, it doesn't just affect the Japanese, it has ripple effects into how the rest of the world's economy works. So that's something we're watching as well that would have major impacts, not just on Bitcoin, not just on crypto, but on markets in general. T-Shroom, you want to add anything to that point before we move on?
Well, I explained what the carry trade is. The carry trade is something that it specifically benefits those who are in that trade, right? It doesn't necessarily add or remove liquidity from the markets. But what you have to realize is, and gets into the heady advanced section of it, right, is that when that trade becomes less profitable, then banks and hedge funds have to hedge elsewhere. They have to get that 5% somewhere else, or they have to get a very durable fixed interest rate somewhere else, and they'll probably end up a lot of it staying in U.S. Treasuries, but they won't be able to continue to fund that and get more from the free money from Japan. So what does that do? That could be bullish in the mid to long term. That could shift a lot of that liquidity that would have been kind of gaming that arbitrage and shift that into U.S. equities, Australian, European equities, whatever. Peruvian real estate. The money's going to go somewhere. Could just sit on the sidelines in stable coins or dollars, right? But the money's going to go somewhere. In the short term, though, why do markets go down? Because of the uncertainty factor of where that money's going to go, right? And that's the uncertainty of the short term. Markets act like a casino. In the long term, they act like a actual measure of value. So we're going to, unfortunately, if we get that hike, we're going to get caught in not just one crazy casino market with the Fed doing a double rate hike here. We're going to get potentially caught in a double casino, double chaos in the markets with the carry trade unwind. So, and you can look at the markets. You can see. I mean, the S&P did what, like 5% down over the course of 3 days as that carry trade unwound. It didn't fully unwind. It's not like all of the money came out. It began to unwind, and then it came back on. But that in the meantime, there's enough chaos for the S&P to get de-risked, repriced to the downside. So, yeah, it's complicated, right? It's complicated, but we're trying our best. We're trying our best. To summarize it, if they hike, it's bad in the short term because there's going to be a lot of chaos and uncertainty. In the mid to long term, though, those dollars and the yen have to go somewhere. They have to go invest somewhere. So who knows where it's going to go, right? But it's probably going to end up being bullish in the mid to long term. It's just in the short term, there's a good reason for markets to sell off.
Now, I want to address a question here. Sahil Kikar, I think, said, Tim, I got a question for you. Do you think it's a bull trap on every coin that is pumping? What about alts? I cannot say all coins. There might be some small coin out there with a very small amount of market cap that is getting some form of adoption, some sort of big partnership, and they're going to do something like a 300% gain, and they're not going to go into a short-term pullback. I do think it's a bull trap for the majority of coins. I do think that a lot of the pump that happened yesterday is going to pull back. Let's talk. We talked about this a little bit yesterday. I still am bullish on this, but I want you guys to take a look at a similar type of move to what we saw happen during the Bitcoin ETFs. You can go ahead and share my screen here really quickly, T-Shroom. Ultimately, the news that you need to understand is that we were waiting for months for the Bitcoin ETF, and then the Bitcoin ETF was approved on January 10th of 2024. All right, so you guys can see here, we'd been moving up and to the right, higher highs, higher lows this whole time. And then on the 10th, it was approved, and it was announced that it would be available for live trading on the 11th, the very next day. Well, what happened here? The day started off with a bang. In fact, we shot up to $49,000. A lot of people were just convinced that at this point, man, this is such a bullish piece of information. This is so good for the markets. Man, go ahead and buy in now while you can, because we're going to be at new all-time highs very, very soon. And in a level of thought, they were right. Of course, if you were to zoom out and then look over the next couple of weeks and months, by March, we would hit brand new all-time highs before the Bitcoin halving event. That being said, take a look what happened over the next couple of weeks. It was a pullback. This is a great example right here of a bull trap short term that ended up leading into this information is good long term. It's going to be bullish and set us back up and to the right. So when we're talking about things that I have said and not said and what I'm wrong about, I'll say this another again. It's 46K possible. Yes, it's absolutely possible. But I have kind of come to the conclusion, you know what? There is a level of understanding that says, you know what, maybe we're able to only drop down to 57,000. Maybe it won't be as bad as what I originally thought a 50 basis points going to be. We don't have to go to 46,000. Possibly we only come to 57. That being said, as we mentioned earlier, the entire market, every person that was analyzing this market reasonably and logically was very thrown off by what happened yesterday. And in respect, the markets have pumped over the last 24 hours, but it has a lot of that same feeling that we had back in January. That is this too good to be true. Go off my screen here, T-Stream. Let's talk about why this is good. 50 basis points is going to be short-term bad, but long-term good. Long-term good because ultimately, yes, the easier it is to borrow money, the more liquidity comes into the space, and the markets will pump. However, historically, when these rate cuts first come, there's a little bit of a dip in the market. That dip can last maybe even a couple of weeks. My ultimate thought here is, though, as long as this is good long term, but in the short term, this immediate pump to the upside reeks of the smell of manipulation to set up some form of a bull trap and then pull the markets back so that whales can buy the dip. And then long-term bullish price action comes, the bull market hits, we still go up into the right and hit new all-time highs. There's nothing about this that has changed my perception of if we're in a bull market or not. But I do question how fast we moved, the volume in which we moved with, the news that came out and the details. These are all things that just don't sit right with me logically. And I said this yesterday, but I want to make sure I say it again to everybody. By the way, shout out to NMCT saying, let's go, almost 1K viewers. Yeah, a lot of viewers in here today. Thank you for being here. Smash the like button. 50 basis points. It doesn't make logical sense right now. Let me explain why. If you go all the way back to 2022, when we first started raising interest rates, there was a lot of people saying we need to get more and more aggressive. But Jerome Powell and the Fed said, oh, we're looking at the data. It's not that big of a deal. We're going to hold off for now. And then even when they started raising rates, they said, you know what? We don't want to overreact and hurt the job market. So we're going to start off nice and slow and go up 25 basis points at a time. Now, things got really bad really fast. And so we actually saw a 50 basis point rate hike and then 2 consecutive 75 point basis rate hikes, followed by several 25 basis points. Ultimately, the problem is Jerome Powell started way too slow, said everything was okay when everything was not okay, and then it caught up to him and he realized he was in big trouble. Why? Because despite the fact that we've held off an economy, a recession, even though we had 2 quarters of negative GDP, even though there is a lot of people out there losing jobs and a lot of things are going wrong, the data right now says we're not in a recession. I understand that. I understand that he's going to look at data as it comes. But what changed? What changed in how he acted this entire time we were raising rates, even up to 2 months ago? I want to remind you the words that he said 2 months ago. First of all, someone asked about 50 basis points. He said that's not even a consideration. But he also said the reason we're not cutting rates yet is because we have been doing a very good job at cutting inflation. The jobs are not necessarily out of control. And we don't want to overreact and come out too aggressively and ruin all this momentum we've made over the last 2 years. To which I actually said on this show, I think that's a wise move, and he's absolutely right. Yes, our unemployment numbers starting to rise. Yes, they are. But inflation is not yet where we want it to be. And if we want to fix this problem, all while our current government is still printing money every single day to pay for all of their bills, we need to be very cautious with this. And that's why I thought it's time to cut. It's time to go into interest rate cuts, but let's be conservative. Let's keep that same ball rolling, Jerome. Let's keep going with this cautious approach. We don't want to be too aggressive. We're going to do things very slowly and feel it out as we go. That's what he said 2 months ago. What changed? Why all of a sudden now is he deciding we are going to cut rates aggressively by 50 basis points? Oh, by the way, if you go take a look at CME futures at the moment, go to my screen here, T-Shroom. The November rate cut prediction, 50% saying another 50 basis points. What does this mean? Why are we predicting such heavy cuts after such a long time of saying we're going to be careful? We're going to be reserved here. I'm not saying the data is going to come out and we're going to end up being in a recession, but I guarantee you there's people that are just like me who are watching and listening to what Jerome Powell says, realize that his words do not match up with his actions. This is something that he must know, or some outside figure is telling him, you need to get aggressive here or we're going to be in trouble. Well, if we're going to be in trouble, what's going to get us in trouble? What's happening with these data points? Is unemployment a lot worse than we actually think? We've already seen the data get corrected once in the last couple of weeks, showing that there were some fudged numbers. Are we about to get data in the next 2 months that's terrible, and they realized they waited too long to cut rates? Again, it's a good move long-term for the markets to start cutting rates. The problem, though, is what it communicates getting aggressive. That aggressive move, more often than not, comes with fear of something bad is about to happen. It's just what history says. When you see a move like that, it's usually because something bad is about to happen. And I'm not saying it's necessarily going to. I almost even wonder, man, maybe that 50 basis points and maybe some other moves they make are going to right the ship. But the way the investors will work, the way that the economy will work, is they will perceive this as a potentially bad move. They will sell off. They will allow the market to dip until they feel good about where the market is, and then the price will rally back to the upside. We saw this happen in 2020. We saw this happen in 2016. I'm not predicting a 2008 or 2000 or 1980 massive multiple year long recession where price just crashes and crashes and crashes. There are people out there predicting that. I think some people are going to lump me into them this morning, say Tim's a bear right now, and they're going to lump me in with a lot of these other people that are calling for brand new lows in Bitcoin. That's not what I'm saying. But I am saying that the details of what happened yesterday were fishy. The fact that we pumped, I mean, at best, we should have just stayed sideways. We should have been looking side to side and saying, what just happened? Why did that happen that way? But instead, the market's pumped. That smells very, very fishy. I'm not selling my Bitcoin, but I'm not buying any extra right now either, because these are the types of moves that come right before another major dip. And if you go back over and you look at the Bitcoin charts, we've seen this way too much. You guys have been heartbroken over the last couple of months because we'll have these big pullbacks and then we'll start rallying back up to these higher levels and people will be convinced that we're back to being bullish, and then we'll have a much larger pullback, and then we'll rally and then we'll have a much larger pullback, and then we'll rally and we'll have a much larger pullback. And there's always these great reasons and explanations for going to the upside. But if you think about it, it always was matched with a little bit of fishiness, a little bit of details that just didn't sit right. And what I'm saying right now, because I see someone saying, Tim, you're scaring us. That's not what I'm saying. I'm not saying sell your Bitcoin. What I'm saying is this rally is too good to be true with the wrong information. What we heard happen yesterday, while it will be long-term helpful to the markets, its short-term is a massive question mark. And what do smart money people do when they see question marks? They don't buy. They look for a way to exploit the average retail investor to find some way to buy another dip. Where's that dip? Probably sitting somewhere at least at $57,000, possibly down to $46,000. Ultimately, this is the volatility you guys signed up for when you bought crypto. Hodl on. It's going to be okay. Things are not going to zero, but this might not be time to be entering those 10x long leverage positions on your favorite cryptocurrency. There's a chance 10 to 20% pullbacks are still on the table before the bull market continues. And I'm going to throw it to T-shirt. Sorry.
Yeah, absolutely. Yeah, well, we've got some more analysis here. We're going to turn to the mainstream financial media here to kind of see what the mainstream brain is ingesting today. This has been on the front page of CNBC all day. This is the Fed has set out a recalibration of policy. Here's what Powell's new buzzword means. So this is actually pretty juicy here, Tim. Strap in. So these are his words. This recalibration of our policy stance will help maintain the strength of the economy and the labor market and will continue to enable further progress on inflation as we begin the process of moving forward in a more neutral stance, Powell said. Policy has been calibrated for meaningfully higher inflation, with the inflation rate now drifting close to target. The Fed can remove some of that aggressive tightening and they put into place, said Tom Porcielli. This is a commentary. It really shows him to push this narrative that it really allows him, to push this narrative that his easing cycle is not about us being in a recession. It is about extending the economic expansion, he added. I think it's a really powerful idea. It's something we had been hoping that he would do. So that's Wall Street saying, heck yeah, bring on the free money, bring on the lower rates, the cuts, right? Of course, that's what they want.
And to chime in on that, this is what I'm talking about. I'm not saying that we're guaranteed heading for a recession. I know some people are hearing what I said and said, oh, Tim is talking like doom and gloom. All I'm saying is it doesn't make sense to go 50 basis points instead of 25. Everything that it just said, if Jerome Powell had said everything in that press conference the exact same way, but the number would be 25, all of this would make a lot of sense. But why did he flip from being a conservative, we don't want to risk anything, we don't want to risk hurting our progress, to being aggressive and saying we're going to jump by 50 basis points? That is something that just doesn't necessarily make sense. And I'm not saying something bad's going to happen. There's a chance that Jerome Powell might honestly have thought that 50 basis points was the best. I'm just telling you the way that whales will handle this, the way that smart money will handle this. They've been around the block. They've seen this dance before. They know that there's something that potentially Jerome Powell and the U.S. government are trying to get out ahead of, and they're going to sell off and wait for a better opportunity to buy once we know a little bit more information. I think it's going to be very important. I mean, I thought we were kind of getting closer to where, not that these numbers wouldn't be important, but be less important, but this just made everything very, very crucial to watch. What does the next CPI look like? What does the next PPI look like? What do these job numbers look like? It's going to be something to monitor. Did Jerome Powell act correctly? And is what he's doing going to keep the economy looking good on paper? Or, kind of very similar to what we've seen in past recessions, is he cutting because he knows something we don't know and we're about to enter into a small recession? We've been pulling back in crypto here for a little bit. Again, that's not why I don't believe the crypto is going to be crashing to any crazy new lows like 20,000 or 15,000. But I think a pullback is definitely still on the table because I think that smart money doesn't really know what's happening right now and doesn't like that decision that Jerome Powell made.
Yeah. A lot of fishiness, not just because it was a 50, not 25, but there's a lot of fishiness in the run-up. Why did the betting markets that anybody can anonymously use, why did they go to 50 when 25 had been the dominant prediction? And then why did it go back and forth, right? Why did Elizabeth Warren ask for 75 basis points? Does she have a lot more power in Washington and potentially the Fed than people think? You know, she was public with that. How much chatter, how much noise was she making privately if she was willing to come out publicly and say for 75? That's one way to read it, right? It's a very specific angle to observe that from. We've got a lot more news here from Chainlink, from crypto. BlackRock's got a report out that we'll highlight a couple of points on. We'll hear from Arthur Hayes, but I feel comfortable just kind of camping out here, asking for a few more minutes, just kind of thinking this through. Maybe there's a lot of folks in chat presenting a lot of really well thought out comments here. You know, ultimately, we're in this transition period from quantitative tightening to pausing to quantitative easing, right? And of course, the transition is going to feel bumpy. It's going to feel forced. It's going to feel strange. So there's a good chance, bros, like Tim and I are detecting something fishy, right? But what does that mean? Does that mean you should buy? Does that mean you should sell? I don't think it has a direct translation into buy or sell. I think what it means is this transition where the market is going to be going to the rest of the year is definitely not yet certain, right? That, to me, that's what that means, is something is fishy going on. So anybody who's coming out and saying it's definitely going higher or it's definitely going lower, those are the voices to be hyper skeptical of. What I've been saying, what I think is going to happen is we pop higher, which that prediction has already happened, regardless of what we got, as long as it was a cut. We pop higher, right? And then we come back down and we test probably 55, right, for Bitcoin. And then we may go a little lower, get oversold, right? But that's kind of what I've been thinking. We'll see. That's a prediction, though. I'm not saying that's going to happen. There's a lot of voices out there saying we'll never see 58K Bitcoin again. That's a little strange, right? That's a little fishy too. Yeah, Tim,
Yeah.
what are you seeing in the chat? What are the bros saying other than you're wrong?
Again, there's a lot. Yeah, there's a lot of you're wrong. There's a lot of people who are just going to continue to believe this pump. And here's the thing: this is why, just so you guys know, this is why we are preaching to you not to sell this information, but to wait for an ability to buy in lower. Because guess what? If I'm wrong, I'm going to make money. If I'm right, I'm going to make money. But if you sell this news and you're wrong, you will lose money. You'll make money if you're right, but you'll lose money. The right scenario right now is to be cautious, is to question this, is to understand this is not looking right, and not to ape into a position where you end up buying the top. If we end up being wrong and the price goes up, good. I never sold. I still have my long-term portfolio. That'll do very, very well. But if I'm right and I'm saving the current dry powder, maybe even looking for a hedged position in a short to make some more dry powder, I will have the advantage of being able to buy the dip here very, very soon. The bull market is still here. A lot of people in here, long-term bullish. Sends us saying, thanks, Tim, JK. So I don't even know what to do with that one, but thank you for that chat.
Let me look for some other good comments. I got a couple in there as well. But let me just re-articulate what Tim just said, because it's such an important way to win in the markets. Not just understand them, but a way to win is you always want to position yourself to win if price goes up and win if price goes down. So T-Shroom, I don't want to get involved in a bunch of complex options, buying puts and selling calls. You don't have to do that, right? The way that you win, no matter what direction it goes, is by simply having dry powder on the sidelines. What does that mean? That means when you get your paycheck, don't spend it all. Don't invest it all the first day you get it, right? Invest 25% of it, because chances are by the end of the week, you might have a lower price to buy. That's a way that you can win if the price comes down. Tim, what are you seeing?
Yeah, a lot of things in here. Natu says you'll never see Bitcoin at 54,000. Maybe not. Again, maybe not. I think I said 57 is where I'm looking right now, and then there's an outside chance it goes lower, but there's a chance there. Let's see. Flip the fractal Bitcoin for more wins. Okay. All right. Very good. So a lot of opinions in here. It's never, this is a ME24. It's never a good idea to buy the pump. However, time is short now with October coming and FTX money injection. Yeah, I mean, this is one of those things that I think plays out very quickly. I do think this is almost like, again, we've compared it in this morning video and a little bit yesterday, but go back to 2020, and I'm not saying this is a black swan event necessarily, but I'm saying one last really good pullback, and then it starts a very explosive move back to the upside. This is, people talk about blow off tops, but these like falling knife type of situations, I think things can get ugly decently fast and then get really good looking very, very quickly. The problem is the dip just happens with such strength and conviction that a lot of retail will freak out. Most of you guys will feel really bad. You'll be like, oh my gosh, Bitcoin's crashing again. Oh my gosh, is a recession here? This is terrible. Sell all your Bitcoin while you can before we hit new lows. And then they'll buy the dip, them being the smart money buyers. And within the next couple of weeks, we'll be back up in sunshine and looking at brand new all-time highs. So it's a type of thing you got to continue just to watch how the markets move here and understand that trading and investing is a game. Yes, if you just hodl long-term, you'll make a lot of money. But if you keep getting in and out and in and out and in and out, but you don't understand how the game is played, more than likely, I'm going to describe some of you guys out there, you've been buying the tops and selling the bottoms because you don't understand the game. And the game is manipulation. That's what I think we're still
Yep.
seeing play out right here.
Tim, I've got a challenge for us. I've got 3 comments here that are good. They're worthy of note. But why don't we give each one sentence response and see how well this goes. First one is from I'm a 24. He said, "I think we just go sideways till election." What's your one sentence response, Tim?
That's a long time till election. I don't know. I don't know about sideways. I think there's some volatility.
Okay, I think that was 3 sentences.
Yeah, but it's a hard one to do one.
I agree. Depends what you mean by sideways.
Was that 2 sentences? I don't know.
All right. Mason Fiad said, "Why not sell and wait?" Tim?
Because if you're wrong about selling, then you lose out on all those gains. So it's a hedging position to not sell right now.
I think this is impossible for us.
Yeah, I think it's a time limit. I think you should say like 10 seconds. One sentence is too awkward.
If you don't have exposure, price can't go
Okay.
up. Price will leave you behind.
I don't think that this is the right way of doing this.
I don't think it's the right way either. Senza said, "I sold half my Arrow, that is Aerodrome, the layer 2 DEX on base, anticipating a dip, and then it pumped to 27%. That literally is the answer to the previous one."
Yeah, we did. We told you not to say. Like, yes, did we predict prices would go to the downside after all of the volatility? Yes, and I still think it's going to happen. But we have been very, very clear not to sell, to look for a position to open up a new long on the downside.
Yeah. Don't sell. Look, this is a good way to think about markets. There are entire hedge funds. Well, I guess there are entire funds that are buy only, right? You can look this up. There's buy only funds. All they do is buy. They're just really careful about what they buy, right? So they do a ton of due diligence on the front end, and they just never sell. Now, it's complicated, how they actually, so they're borrowing against that collateral and they use that for expenses and stuff, right? Mm-hmm. But you can think about it like that. You can have an account that you trade, you go in and out, you buy, you sell. Then you can also have an account that you only ever buy and hold. That's okay. That's totally fine. And to be honest with you, that's how ordinary millionaires are made through the stock market. They just buy and hold in a 401k. And then when it comes time to retirement, it's not that they're really selling. They're just utilizing that capital to live at that point. They are selling, but hopefully that makes sense to you. So don't sell. Like, just because someone might be bearish doesn't mean you should sell. It just means that prices are going to go lower, right? But that's where you buy more. So
yeah, it'll be time to sell if we start talking about bear markets, or if you're convinced. Again, that's the more important thing. It doesn't really matter what we say as much as you're continuing to do your own research and you understand what's happening. When you're convinced there's a long-term bearish move coming, that's when you sell. What we have talked about is not long-term bearish. It is a short-term crash out of confusion and out of concern, just like we saw in July and August. I want to stress that, guys. What we're repeating is repeated moves. What we're predicting here is a repetition of moves we've seen twice within the last couple of months. Major dip in July and major dip in August. Why? Because there was concern and fear about what was coming. It ended up not being true, and the rally and the markets jumped right back up. What I'm saying is what happened yesterday, I think, is one more reason to see another move just like it, with a very, very fast drop, followed by a climb back up to these levels, and then new all-time highs. And that's why I said earlier, not sideways to November. I still think we're going to see new all-time highs before the end of the year, and I think we could see all-time highs before November. I could be wrong there. We could have to wait until we actually get a new president decision before we actually make those higher moves, but I still think there's plenty of time. I think October is going to still be a decent little month. The question is, do we just start October with still a little bit of downward motion before we start to rally sometime mid to late October?
Yep.
Joseph Gunter with a super chat. Thank you so much, Joseph. Said, have you heard about BlackRock being able to borrow unlimited amounts of Bitcoin from Coinbase? I imagine there will be more paper Bitcoin than actual Bitcoin, similar to gold and silver. So this is some FUD, Joseph, that came out here over the last week. We actually talked about it on a different show. That's not necessarily how it works. So people who are kind of enemies of Coinbase kind of simplified some stuff to make it sound like there was fake Bitcoin being produced. The CEO of Coinbase came out and talked about this. That's kind of the way that we work in the ETF world. If you want to bring the ETFs into the world, the way they have is that you can buy Bitcoin throughout the day, and they don't have to actually back their funds with it until the next day starts, right? So yes, if there's a massive amount of inflows one day, technically speaking, no Bitcoin is exchanging hands. BlackRock, for example, is just gaining a bunch of new ETF buyers. What happens, though, is at the end of the day, they have to go to Coinbase and say, hey, we had $18 million of Bitcoin added today. We need to make sure we get 18 million Bitcoin put into our custodial account. So does it start off as being paper money? Yes, but there are still rules and oversights to make sure it doesn't just inflate Bitcoin to oblivion and cause fake money. This is something that was FUD, and it has been dispelled.
Yep.
It's not a big detail.
Yeah, and if you want to see the proof of that, it's right here. You can go back to Brian Armstrong at Brian_Armstrong, and he explains it all right here. But his summary is this is what it looks like if you want a bunch of institutional money to flow into Bitcoin, which we do. We do want that. We have to have that. You don't get a $12 trillion Bitcoin by market cap if you don't have big institutions like pension funds and foreign direct investment, unless there's this way. Yeah, and it is true. Now, you might be listening and be like, okay, well, that's oversimplified. It is true that you're moving away from the Bitcoin ethos of full decentralization, but it is, unfortunately, you're not going to get the unlocks of these huge, super slow-moving, super conservative funds unless you operate this way with a custodial service provider like Coinbase.
Joseph gave another super chat saying, okay, last question then. Are they borrowing the Bitcoin to sell short and keep the price down? What type of risk does this create for Coinbase? I don't know. I don't know the answer to that. I would not put it past, now whether they're doing this to Coinbase or not, I don't know, but I wouldn't put it past BlackRock to be one of the bearish pressures that they're manipulating the markets by selling against it. But let's just think about this logically. Again, all roads still lead to bullishness. If you just follow the laws of how Bitcoin works and where we are right now in the cycle and the amount of adoption that's coming in, desire to get a hold of it, Bitcoin is going to the upside. We are still in a bull market. So even that concept of BlackRock suppressing price and keeping it lower, ask yourself, why is BlackRock keeping the price low and suppressing it? And the simple answer is because they want to buy it as much as they can at these low levels, which is another piece of evidence as to why I believe that this rally we're seeing today is a little fake. I think this is going to allow them to take some profit on some moves, manipulate the market back down, and buy some more cheap Bitcoin before we start the second leg of the bull market. This is the game. This is how it is played. And if they have the ability to do it, and they have enough retail investors out there that are super, super bullish, they can go after all the liquidity of all those new buyers, get them out of the space, and buy cheap Bitcoin. That's why I'm skeptical right now. And I thought I saw someone earlier in the chat say, oh, the reason it's going to go up is because everyone's so bearish. Who's everyone? Because I definitely am one of the few people that thinks that a big price to the downside is coming. And I feel like that scene from Game of Thrones where, what's his name? Jon Snow is just standing there in the field as like the hundreds of horses are running at him. That's how I feel right now. And you know what? I'm completely okay with that because, as I told you guys, I get things wrong. But I'll tell you right now, the majority of the times on this channel that I have gotten major decisions correct have been when everybody seems to disagree with me. So if you just scour the internet, if you scour the average Bitcoin investor, people are super bullish right now. I'm not saying everybody. There is a few of us, even here in this chat, that are bearish. But there's not a lot. And people are acting really bullish right now, and I think they're running into a trap.
So we got a little bit of time here, 6 minutes. We're going to do a lot in 6 minutes here, Tim. You ready? Joseph Gunter said, I wonder if a short squeeze happens and they get liquidated and Coinbase loses a lot of Bitcoin, but it becomes FTX 2.0, but moving up instead of down. That's interesting. That's an interesting take.
A short liquidation would only hurt people that are in short positions. So I don't know what you mean by that. I don't think Coinbase does a lot of heavy leverage long. So like Coinbase is not FTX. FTX was super leveraged. Celsius was super leveraged. A lot of the exchanges that are around today have learned from the mistakes of those two colossal mess ups. They're not overly leveraged. Where if price were to go too far to the upside or downside, it would ruin their business structure. In fact, if you're Coinbase, if you're Brian Armstrong, I'm not saying he doesn't own any Bitcoin, But it's one of those things. It's like you're going to make way more money selling people the shovel than you are digging for oil or digging for gold, right? That's what Coinbase is. They are making a whole lot of money in fees, selling you the ability to hold and buy and sell cryptocurrency. They don't need to be heavy leveraged to be a successful business. They can just collect your fees and be a thriving business. And if price goes up, then you're good. If price goes down, then you're good. That's kind of how they operate. They're not FTX.
If Bitcoin is going to become the new gold, all of this kind of stuff is going to happen. There's going to be all kind of futures trading around it. There's going to be IOUs written on top of it. Just because Bitcoin exists and is growing and becoming dominant doesn't mean that Wall Street stops existing, right? It doesn't mean that these complex financial maneuvers stop existing. They probably just intensify with DeFi. All right, let's keep moving here because BlackRock.
Do we have a
Yes, we do have a factoid of the day.
Do we have a factoid of the day? Okay.
BlackRock has released this. This is Bitcoin, a unique diversifier. This is their report. If you are in our Discord, you got access to this earlier. I am reporting on this a day late, a day after it came out. Bitcoin's long-term performance. You've probably seen this chart on Twitter. Now a bunch of TradFi eyes have read this report and are seeing this chart too. What does it look like? Basically saying we're ready to do a big push higher. And then it kind of highlights the fact that Bitcoin, similar to gold, is uncorrelated to the U.S. equities markets. Sometimes it trades with it, but there's also significant periods where it does not. And then there's also this one. This one's pretty cool. During periods of geopolitical events, you can see that Bitcoin outperformed the U.S. equities and gold. And then there were, like in the case of the U.S.-Iran escalations in January 2020, Bitcoin did 12% while the S&P and gold were flat. And then also there were periods where Bitcoin basically went along, during the COVID outbreak, when the SPX did 20%, gold did 9% to the downside. Bitcoin did also followed suit, did 25% to the downside. So you can look, this is a free report. You guys can go digest this for yourself. We're going to keep moving. Arthur Hayes, sharing his opinion, criticizes the Fed's rate cut, points to Friday for Bitcoin reaction. So basically this a very, very similar kind of take from here in the Investing Bros. The first reaction is there, but real movement comes after Friday's TradFi market close. From then, Bitcoin could go up or down over the weekend, he noted. So through the rest of the week, there's going to be a lot of manipulation through the U.S. stock market, and there's going to be all kind of chaos. When those markets close, then it's game on for Bitcoin over the weekend. We're going to see a lot of price action over the weekend. Because that's the only asset, one of the only assets that's traded over the weekend. Eyes on Japan's central bank. In addition to the Federal Reserve's action, Hayes pointed out that the global attention will shift to Japan as the BOJ is set to announce its own interest rate decision on Friday, September 20th. That's tonight at midnight. Midnight Eastern Standard Time. He believes this decision could further impact Bitcoin's performance depending on the strength of the Japanese yen. The weaker the yen, the stronger the Bitcoin becomes. Watch the USD to GPY closely, he said, adding that stronger yen could negatively affect Bitcoin's price. So that's a lot, but we're going to keep moving here. Some bullish adoption news. Louisiana state government officially accepts Bitcoin and crypto as a valid form of payment. I put up a poll: would you ever pay property taxes in Bitcoin? Most people say no, more than 75%. Chainlink Sergey Nevrov says tokenization will turn TradFi into DeFi's top customer. This is just, again, a bullish asserting Chainlink as authority in the tokenization RWA space. Navarov highlighted DeFi's ability to generate yield and create reliable markets for RWA. He urged the industry to prepare for this shift, noting that it's already happening, driven by asset tokenization. According to Navarov, blockchain technology is giving TradFi exactly what it needs. Again, continuing that theme that if we want to get a $13, $15 trillion Bitcoin, we got to bring TradFi in. Pension funds, real estate has to flip into Bitcoin, right? 401ks have to much more significantly flip into Bitcoin. And the good news is it's all happening, right? Bitcoin purists are not getting what they want, right? The waters are being muddied and being tainted by the Wall Street wolves. However, we are seeing price go up and to the right. We've got a soundbite here from none other than Tom Emmer. We're going to listen to that. We're going to get into the factoid of the day on the other side of it. Let's take a look, Tim. Let's take a listen.
Look forward to working with Donald Trump and pounding a stake into the heart of the administrative state. And that is one of the prime examples, Gary Gensler at the SEC, and he should be fired. He is not, he's gone well beyond, frankly, he's gone against his mission.
Yeah.
The mission of the SEC is to make sure that every American, doesn't matter if you're wealthy or if you're poor, has access to the greatest financial markets on the planet. I look forward.
So very, very bullish there from Congressman Tim Emmer. Looking forward to working with Donald Trump. Tim, let's go ahead.
Hot.
Yeah.
Real quick, before you do the factory day, I completely forgot. We have over 930 people here on YouTube watching, another 200 and some odd over there on X. Thank you so much. Make sure to smash the like button, everybody. And we don't have a lot of time left here. So what I'm going to do is this. If tomorrow morning when I wake up, we have a Q&A actually in the morning, tomorrow morning. No video going out in the morning here on the channel. But when I wake up, if we see 1,000 likes on this video, very doable. I mean, this is going to get viewed by a lot of people with this many things. We will give somebody in our community, if you comment, like I said, we're going to choose a comment. So you got to watch, you got to like, and comment on the video. Not here in chat. Go comment down below after it's done. We will give one of you guys $50 for a giveaway. We need to do a better job of that. We're going to start doing more like goals to give away every single episode, but we got to hit certain likes. With this one and this many viewers watching, I'm going to give you guys till tomorrow morning. Go tell your friends about it. Have them come in and smash the like button. Honestly, that gives you a better chance of getting there. Let's get to 1,000 likes on this video, and we will do a $50 giveaway. T-Shroom, let's wrap out with a factoid of the day. And then for all of our trading members, I'm going to be going live right after the show. Got to set up on Zoom, but I'm going live for more Q&A. If you guys want to come in and ask me more questions, do some more charting, we can do that. Just got to join our trading membership platform by a couple different ways in the link down below in description. Go check that out. Then T-Shroom will be live again tonight at 7 p.m. and he'll be live when we get the decision, or when we get the interest or inflation rate, from Japan. That's going to have massive implications about what happens tonight over there with the Bank of Japan. All right, T-Shirt, what do we got for our factoid of the day?
Well, this is the link to join the Discord. If you're sitting there clamoring, where's the link? How do I join the Discord? This is how you do it. And today, the factoid of the day is brought to you by the tax pros over at decrypted.tax. And their link is right here. So check them out. You get 25% discount. They're professional tax services when you click the link down here in the description from the Investing Bros. Tim, what island is the largest in Japan? Is it Hokkaido? Is it Kyushu, Honshu, or Shikoku?
I don't know.
You don't know?
No idea. Listen, I grew up with a lot of people. Like, when you ask the question, like in high school, people are like, "Oh, what country would you want to visit when you grow up?" And everybody in my friend group said Japan. I guess that's a really big tech thing. I wasn't a tech kid, so I don't know anything about Japan. Geographically, a lot of people are saying Honshu though, except for Dave Digital. He's saying Kyushu, but C seems to be the popular opinion in chat. So I'm going to rock with that one, and we're going to go with C, Honshu, but I honestly have no idea. Okay, there we go.
Check it out, Tim. Honshu is the main island of Japan, and how does it feel to be so smart, Tim?
Well, I will say this, and I've been kind of mulling on this the last couple of days. We've gotten a lot of these. It's been a long time since we've gotten one wrong, but it's also because I allow chat to play with us. Should we make it to where I'm not allowed to read chat to answer these questions? Would that make it more fun? Would that make it more challenging? I think we'd have to change up the types of questions. I mean, it has to be at least in a purview of my understanding to make it somewhat interesting. But I do feel like potentially it's a little bit cheating and taking the fun out of it for the chat to play as well. But I don't know. What do you guys think in chat? Do you guys like being able to help me, or do you think I should have to do it myself and come up with the answer myself? Let us know and give us feedback on that. It's a little bit long show today, 4:04, but we are going to go ahead and wrap it up. Stupid thing. I always love it. It takes Tim an hour and a half to watch 60 Minutes. Wow. It's not new, but it always makes me laugh when I hear that. All right, let's go and wrap up today's stream. If you guys enjoyed the video, smash that like button and comment down below after this is over for the chance to win $50 tomorrow morning if we get to 1,000 likes. Smash the like button. Love you guys. See you tomorrow. Adios.
make paper, turn that batter to cake. Money like Lego, connect the dots, stack bank. We are investing bros. We are investing bros. Army pipe, lethal on trade. Entries and exits, worthy of praise. Tim, the professor, the TA. Shout it out loud on the PA. T-Shrooms news, got the word. Doing better than what he deserves. Beamer, leave no evidence. Soon fly coop with his dividend. Tryna make paper, turn that batter to cake. Money like Lego, connect the dots, stack bank. We are investing bros. We are investing bros.
Investing bros. Investing bros. Investing bros. Investing bros. Investing bros.